Welcome back to QAV Australia, Tony, episode 837, timestamp 16th of September 2025. How you doing, TK?
Very well, thank you. Very good.
That's
Alex's
good.
birthday today. Happy birthday to Alex.
Birthday, Alex. 27?
6.
6. I should know that. She's 1 year older than my boys, not 2. I
Right.
always remember.
I think
What's
she's a
she
bit
doing to
sensitive about
celebrate?
the age too, so make sure it's 26, not 27. Not much. I think she's going out with friends tonight. We had a dinner with her on Friday night, and then we saw her on Saturday night at a party we were at. So we've caught up a couple of times. But yeah, it was a good weekend up in Melbourne. Very social.
Terrific. I was just thinking, I was on my bike ride yesterday. I was thinking, you're coming up to your 1 year down there, aren't you? Wasn't it January you moved?
January, yeah. Yeah, so what's that, 9 months now? Yeah.
What are the plans?
We're just deciding whether we extend the lease in Sydney or put it back on the market.
Right.
So the plan is just to wait it out and see. Well, we're waiting for the property market to improve.
Right. Hasn't improved yet, huh?
I don't know. We're kind of making inquiries, but I
Right.
suspect if it's improved, it hasn't improved a heck of a lot.
Right.
Yeah, so we'll see.
Well, I'll tell you what has improved, Tony. Nice segue. Our light portfolio results. Killing it. The light group, all 4 portfolios put together, which has about 80 stocks in it. Wow, 60 to 80, somewhere like that, give or take, which you would expect to sort of start to approach the all odds sort of performance, I guess, really. But it's currently, since inception, returning 18.15% per annum versus the SPDR 200 at 11.63. So it's well and truly ahead of that. There's 4 portfolios in there, as I said. The first one that I launched is still trying to catch up. It's 6.6 versus 10.21 for the index, because it launched at the worst possible time. But the other 3 are doing great. The second one is 17.6 versus 9.3. The third one is 18.18 versus 12.45. And the fourth one is 22.96 versus 12.18. It has PRN in it, which is up 102% since I added it. I think all of the ones that are doing well have got PRN in them, actually. Let me see if that's true. The third one has GNP in it, which is up 118%. And the second one is got PRN in it, which is up 96%. I think I've said this a while back, but the difference between those 3 and the first one, apart from the timing when the first one just, was in that Rule 1 death spiral for the first year or 18 months, it hasn't really had a huge winner. It's got WGN in it now, which is up 92% since I added it. When did I add that? Let's see. Wagner's Holding Company, December 24. So that's not bad. But the others have had some real rock stars. But there you go. So I'm quite happy about how that's going after a rough start. The dummy portfolio since inception, let's go back to 2019, 2nd of September through to, we'll say yesterday, 15th of September, up 17.83 per annum versus 8.68 for the index. So just slightly better than double markets. And let me look at the US portfolio. Seeing as I'm not doing a US show today, I should just check where it's at anyway. All time, it's up 73% versus the S&P 500 up 49. Not bad. So there you go. Things are cooking. Good looking.
They're doing
Interesting.
well.
Interesting, though, the 1 year for the US is basically equal to the market. We're up 18.6 versus the S&P up 17.5. We're slightly better, but not that much. But we did collapse a lot at the beginning of the Trump administration, as you know. But yeah, QAV works, Tony. I don't know if you've don't know if you've worked this out, but it works. It's still kind of crazy to me, to be honest. Not that it works, but that you taught me how to do this, and I'm running these things, and it just works. It's like, it's still, every time I think about, like, I don't think about it often. When I do think about it, I'm like, oh my God, I know how to invest and get double market results. That's crazy, really.
It is, yeah.
It's crazy that the system is that easy to follow and works, and everyone's not doing it, really.
Mm-hmm. And it's repeatable, and yeah.
Teachable and repeatable.
Teachable and repeatable at different markets. It works. Yep.
Crazy. Anyway.
As Warren Buffett says he's been teaching it for 60 years and it still hasn't caught on.
Well, let's get into some, we'll talk about the news, but I just want to talk about some spreadsheet stuff for the members.
Yeah.
Last week I mentioned that I had figured out a way to flag buybacks, and I went to add it to the checklist and then had some questions that you and I talked about offline. And you ended up coming to the conclusion that what we really want to do is only score companies that have executed a buyback in the last 12 months, where there's been a greater than 5% reduction of their outstanding shares.
Yeah. So, yeah, we had talked a bit over the weekend and last week about what the rules would be for buybacks. And I went back to what works on Wall Street and looked at what O'Shaughnessy did. And just as a quick summary, O'Shaughnessy looked at share market data going back a long time, decades and decades and decades. He had a couple of databases which enabled him to do that. And he did analysis using regression testing. So he wasn't searching for buyback announcements as such. He was just comparing the number of shares on the most recent financial reports with the number of shares from the past financial report. And if there was less shares, he was saying, well, that's a buyback. And in fact, he mainly focused on a thing he called shareholder yield, which was a combination of reduction in shares plus the increase in any dividends, less the reduction in debt. So that kind of combined was what he focused on. But there was a reference to the fact that if he just pulled out buybacks, it still improved his investing. So that got me thinking, well, let's do some research on buyback announcements. And it's a bit like we talked about last week. If you focus on something, it gets gamed. And so originally, I think you talked about coding to look for announcements, announcing a buyback. But then I did some research. ChatGPT told me that somewhere between 30 and 60% of announced buybacks go uncompleted. So, companies like to announce buybacks, and for whatever reason, they may not get to do what they've announced. It could be that the share price goes up and they just stop buying back. But it could also be that they are looking for the bounce that comes with announcing a buyback, and then we'll do a little bit of work to buy back shares, but not a whole lot. So the next question is, can we search for a completion announcement? And that might be possible, Cam, with your code. I'm not sure. We need to look through announcements for completions. There is a market code for it. I forget now what the appendix is called, 3F, I think, from memory. But when I did some research, that appendix is hardly ever referenced in the announcement. So you've got to do a text search for buyback completion, and then you've got to search in the document, if it has it, telling you how many shares were actually bought back, and then compare that to what the number of shares were at the start of the year to work out whether it's a meaningful buyback. So there's a bit of work in that, but that might be the best way to do it. But the second best way is definitely just getting the latest results and then comparing number of shares on issue this half or this year with the prior period. And then it comes down to materiality, because the whole point of looking for buybacks, in my opinion, is that if a company is doing well, throwing off cash, making profits, and it then reduces the shares on issue, then that should boost its metrics. Earnings per share, for a start, will go up. If not, and all the other metrics will as well. So that's really only going to be an impact if there's a material number of shares bought back. And so I think 5% is probably a good hurdle for that. If they buy back shares, but it's less than that, it's not going to have a real boost to earnings per share and the other metrics. If they buy back more, great. So I thought we'd score it for a 5% share buyback, and we'd test it by this year's shares versus last year's shares when they release their numbers. A couple of comments on that. The buyback might already be baked into the share price because, as I said, companies that announce buybacks and then progressively announce how many shares they bought back will get some kind of stock market price lift from that. But again, when I researched that to see whether it was the case that they got their biggest bump when the announcement was made, didn't always appear to be the case. And it was often that the buyback was announced when they were reporting numbers, and there was other things in the announcements that were driving the share price, like, what they see, what their outlook was for their finances going forward, whether there was other things happening with the business, whether the results were good, for example. So it wasn't clear that you could just use the announcement. And then there was also the case that they may not buy the shares, or buy the shares that they said they would buy. So you can't really bank on it. And the other risk, I think, with waiting for the results to calculate the lessening of the number of shares is that the metrics like earnings per share that we're looking for a boost in have already been boosted. So that, at the results time, we're getting new earnings per share numbers, for example, and it's on the lower share base. So the uplift has already happened, but I guess, that's the way O'Shaughnessy did it. And I guess what his point is, and I guess what my point is that if the company is good and it's throwing off lots of cash and earnings, then that reduction in share base is going to keep it in good stead going forward. So it's making the company even more robust. So I think by doing it the way that I'm suggesting, we may not get the initial kicker from the buyback, but the company's better off going forward. So we're really scoring it for its robustness going forward.
So what I ended up doing was writing some code that looks at the stock doctor figures for outstanding shares from the end of last financial year, so 30th of June figure, and the end of the financial year previous year, and comparing the two, and then seeing if there was a greater than 5% reduction, and then cross-referencing that to announcements of buybacks. And if they didn't announce a buyback in that 12-year period and the shares have been reduced by more than 5%, I gave them a score of 1.
Yeah. I don't think you need to search for the buyback necessarily, because if the shares go down, it's a good thing anyway. I can't think of why they would go down otherwise.
Okay. So that's built in. And there was only 3 companies that turned up on the buy list this week that got a score for that: EDU, KAR, and TWR, Tower. So plenty of buybacks, but announcements and buybacks that happen, but not greater than 5% reduction. So
that's interesting, isn't it? So that those ones that have been announced now, we'll be checking in 11 months' time or whatever. It'll be interesting to see how many actually get to the stage of a material buyback. But what you're saying is for the ones that were announced last year, which I guess is going to be kind of equivalent to the number announced now, you only had 3 that actually got to a material threshold of buying back completed.
Yeah.
So that's interesting. Right. That also says to me, ignore the announcement and go on the fact.
Yeah. Yeah. So that was fun. And it was interesting because when you came back to me over the weekend or late last week and said you wanted to ignore the announcement and look at the figures, I was like, I can do that because I'd already scripted looking at Stock Doctor to get the manual data stuff. So I had a script already. I just said, hey, take this script and change it to look for this data instead of that data. And it was a pretty easy job.
Right.
The other thing
Sorry. Well, thanks. First of all, thanks for doing that because that's a big help. But secondly, can you scrape the corporate results for things like that, or do you have to use Stock Doctor?
I could do that. Yeah, now I have all the annual reports downloaded. I can write scripts to search the annual reports and pull out all sorts of data. It's probably going to be a little bit more complicated because I have to, look for certain, I guess, standardized phrases in the reports, but I'm already doing that for the audits. So that's the way my audit checker works, is it scans all the annual reports for mentions of an audit. So I could get it to scan them for anything that's in the reports, really.
So follow-up question, can we get all of our data from doing that?
Yeah, I've been thinking about that. Like there's there'd be a bit of work in doing it, but I could probably do that. Just get all of our data straight out of the reports,
Can save people a Stock Doctor or Stockopedia subscription.
Yeah, they could pay me a subscription instead.
Yeah. Well, yes, both of us, but yeah.
Well, I think, well, me, and then I'd give it to you. I think most of them just get my buy list and can't be buggered doing it themselves anyway, from what I gather.
Yeah, possibly. Yeah.
Lazy people. Well, the other thing that I did was I coded the Breadolator. I finally figured out, again, it's something I've had a couple of cracks at over the last year or so. GPT-5 is now good enough from a coding perspective that I was able to get it done over the weekend. It was another, like the last thing, the audit check was a weekend job. This was a weekend job. I sat down over the weekend and figured out, that's sort of my coding time, figured out how to code the Breadolator. So I used it last night. I did a test run of the full list of stocks from the download from the weekend, which was 224 stocks. Now, what I have been doing with my coded checklist up until now is it goes to the Breadolator, Google Sheets, and then checks the buy status and the upturn status and everything, stock by stock by stock in the Google Sheet, and then puts that into a spreadsheet for me. And it's quite slow because of just the way Google Sheets works. It normally takes about 4 hours to run the list of 224 stocks. My Python version did it in 5 minutes.
Oh, wow.
Yeah. Using Yahoo Finance, not Google Finance. So there's some differences with the numbers, and when I compared them side by side, there are some differences where Google shows one thing and Yahoo Finance shows a different result, but they're, minor.
Mm-hmm.
But there you go. And a shout out to Stuart and Kieran, club members who reached out to me a few months ago and said they were trying to code their own version of the Breadolator. And I said, yeah, join the club. I'm doing it. And I keep getting stuck. So we both kind of agreed that we would, share our findings with each other as we made progress. And I was just finishing mine yesterday when I got an email from Stuart saying, hey, we finished. And I said, I'm just finishing my edge case testing. And then so we've shared things with each other. So we both did it on the same day. Theirs is a visual. Mine doesn't have a chart. There's no visuals. It just scores everything because I just want to put it into my spreadsheet and have it,
right.
I can add a visualizer on it. That won't be that hard. But the hardest thing was getting the rules figured out, like sort of reverse engineering the finer detail of the rules so that match the Breadolator. But they did it and I did it. Now we have a written version of the rules too. There's a line, which we can use to do iterative versions. But the thing that both of us are trying to do now is apply it to commodity stocks. So now that I've got the sentiment checking logic built, I can give it the commodity data set out of the World Bank and say, okay, score the commodities as well each week. So that'll be my next job, my next coding frenzy, weekend coding frenzy.
Fantastic. Well done.
Thanks. That was fun. It was really cool to finally get. I'm calling it the Cammalator, by the way. So the Cammalator is the coded version of the Breadolator.
Oh, based on Cam. Now I saw that in the notes. I'm thinking camel.
Camel?
Why is it named after a camel? No, I get it. Cammalator.
Wow. You haven't had any coffee this morning? Slow morning? That's what happens when you live in the country.
Yeah.
live on a golf course.
Mhm.
Donald Trump has proposed a change in the US. This is more relevant to our US show, but I think it's interesting nonetheless. He wants to get rid of quarterly reporting and move to 6-month reporting. I saw a lot of interesting angst about this in some of the value investing and in just general investing subreddits. People in the US not happy about this, saying that investors want their numbers. And a couple were like, really? Do we really need quarterly numbers? And I didn't weigh into it. I was like, yeah, we get by just fine without quarterly numbers. What do you think of Donald Trump's idea? Apparently he had it back in his first term and couldn't get it done, but he seems to think he'll be able to get it done now.
Well, I like it. The only caveat is that the US has lower continuous guidance rules, but they have quarterly reporting. So basically, they're almost always in the market giving you updates. Australia has 6-monthly reporting, but it has continuous guidance legislation. Now, having said that, as we know, it's weekly enforced in Australia, continuous guidance rules. So, so quarterly reporting might be the better system. Buffett hates quarterly reporting. He thinks you should be focusing on the long term. Whether 6 months is the long term, I don't know, is a moot point as well. But certainly less reporting would get a tick from him, I would have thought. And the only other point I'd say is that we have 6 months and they have quarterly, and the markets over the long term have gone up reasonably similar. So I don't know if there's a benefit to shareholders from one or the other, really. But if I was running a company in the States, I prefer to have 6-monthly rather than quarterly numbers, for sure.
That was Trump's argument in his Truth Social post, that they should be focused on running the business. The conspiracy theory in the subreddits was that he knows that all of the numbers are going to be really bad because he's screwed the economy. And so he's trying to kick all of the reporting down the road so these businesses don't come out and talk about how everything's falling in a heap.
Could be. But if they fall in a heap, then we get an interest rate cut, which is what the market's focused on now and expecting.
You've got some big news, Tony. You want to talk about super?
Yeah, well, it was timely news anyway. I don't know if we've certainly seen the headline that's come out today to say that the CEO has left the business, and it's been an ongoing saga with this company now for a good 12 months, I think.
Super Retail Group, we should just
Super Retail Group, SUL we're talking about.
Yeah.
I own the shares, so I'll also acknowledge that. And we mentioned this once before, that I think it was the chief legal officer and somebody else in the company resigned, claiming, amongst other things, that the CEO and the head of HR were having a secret relationship, but they also alleged other things about bullying, etc., and poor conduct. That's been in the courts. Putting two and two together, it seems like that the court documents are coming to a head, and perhaps to take the spotlight off that, the CEO's left the business. The board have come out with a kind of interesting statement saying that new evidence has come to light that declarations weren't made at the right time or in the right manner prior to the ones that were made by the CEO about the relationship, I guess. So I'm kind of hedging what I say because there hasn't been much information released, but the facts are the CEO's gone. The board has taken away some of his REM, so incentive payments have been removed. The CFO is now the acting CEO, so they'll have to do a search to replace the CEO. So that all smacks of it happening quickly, and that they're in court over they're being sued by the two ladies who left the business when the relationship was first announced. So a lot going on there. I'm hoping, as a shareholder, that this is the end of it and they can get back to running their business and without the distractions. And I guess there's a couple of points to make. It's I'm always a little bit conflicted about these kinds of office relationship stories because they go on, they happen. It's just a question of whether they affect the business. And I think that's the board at Super Retail Group are kind of taking that point of view. And so I'm wondering what's affected the business to make them ask the CEO to leave. So there's something going on. And from the point of view of management, it's another cautionary tale, and it's not the only one. It's kind of as old as Adam, all these tales of office romances leading to problems in the business, because the CEO is also getting divorced. He's lost his incentives. I don't know what else will come out. Do the allegations from the people who left about bullying, etc.? Who knows? So I kind of feel sorry for the people involved from that point of view. They've made a mistake that gets made often, and they probably don't see it as a mistake at the time, but it generally leads to problems for themselves down the track. So there was, of course, the big one in the US of Kiss Cam, where the CEO was caught on camera with one of his staff. But there are plenty of other examples in the past where this has happened and it hasn't ended well. So that's a general comment. But we'll have to watch this. The shares are down some 2% this morning on open. I don't know. They seem to have firmed up in the last hour or so. So I'm not sure how the market's viewing this other than just a surprise at the initial news. But we'll see as it unfolds.
I mean, look, it's pretty obvious that you don't do this, right? Like the guy at the Coldplay concert. Like,
yeah,
it's like I've had inter-office relationships. I was never the CEO, but I've had office relationships. I know office relationships work. You spend a lot of time with people, et cetera, but particularly if you're senior management, if you've got half a brain in your head, you know that, you can't do it. You have to, wait until one of you leaves and then you work it out later on or something. But
correct.
So my question for you though, is this a red flag, the immediate firing of the CEO, and do you dump your holding?
I'm not going to. I don't think it's a red flag. I'll put a question mark on that until we see what the reason is behind it. But I considered whether it was a red flag months ago when the whole thing started to boil up in the newspapers, and the share price has gone up since then. So at the time, I think I said I'll watch the share price and see what happens and still apply the rules for our selling. At this stage, I plan to do that. It's a surprise, but it's given in the context of we know kind of half the information. Be good to hear what the rest is. We may never know, of course. But no, I don't see it as a red flag.
No, well, I mean, their last report was like record revenue performance, and the shares bumped up, and it all looked good business-wise for them. So, yeah,
and usually, well, you never know. Like, the problem with all these things is the power imbalance. If the CEO has a relationship with someone, whether it's a sexual relationship or even just a related party transaction with the company that they own, are they favouring that person or company is the issue, and acting in a way that benefits them and not the best interest of the company. So there hasn't been any announcements that that's the fact in this case, but potentially that something could come to light now that the board's taken action to see the CEO leave the business. So we'll wait and see.
Well, speaking of red flags, last week we talked about Cash Converters CFO leaving rather suddenly, and Paul, who updated us on that, gave us another update yesterday, I think it was. Cash Converters has appointed a new CFO, David Rose, who was most recently the Group CFO and Executive Risk and Strategy at Stockpack, formerly Scottish Pacific Group. He's now the new CFO at Cash Converters, CCV. Do we take the red flag off CCV?
That was quick, is my first comment.
Wasn't it? Like a week.
Last week they lost the CFO and had no replacement, and this week they found someone. So
yeah,
it's hard to say, Cam. Again, we're not seeing enough information. I mean, it's potentially the CFO exited and then they had this person waiting in the wings. I don't know. Usually if a CFO resigns quickly, it's for one of two reasons. They've been poached and headhunted by a bigger company and a better opportunity, which might be the case, and this one we don't know, or they've, been put under pressure to sign results they're not happy with, for example, or to do something else that they're not happy with in the business. And if they resign quickly and unexpectedly, that's the risk that we're managing against. That risk hasn't gone away in this case until we know more information. I think we should wait for the next results to take the red flag off.
Okay. What else you got on your list of talking points, Tony? The Z?
Well, I think I have a portfolio of scandalous stocks at the moment, because another stock in my portfolio is ANZ. And of course, they've come out in the last 24 hours with a huge fine, some $240 million. I mean, it's all over the papers, so people will know about this, I guess. My take on what's happening is the new CEO, Nuno Matos, I think he's trying to clean up his relationship with the regulator. And the regulator, ASIC, has certainly been out in the press having their day in the sun about claiming his scalp. The issues, and there are a number of issues with ANZ, have been going on for a while, and were certainly there around the time I bought the stock, which is possibly one of the reasons why it's a value buy. One of them related to bond trading in respect to the government issuing of bonds and how they're priced and who gets to issue them. And I noted that the markets head had left the business recently, a guy called Anshul Sidher. And I also noted in all the other articles coming out in the last 24 hours that the board is investigating whether they claw back some of the payments made to past executives, including the CEO. So, really, I think that's a good thing. I think it should be investigated at least. But really, I think that I'm hoping, again, this draws a line under any outstanding issues with the regulator. And Mathos came in, and one of the things that I noted at the time was it was reported that he had a good relationship with regulators at the places he worked at around the world. So I'm hoping that's been reset. I'm hoping this is part of him sweeping the decks clean. I guess the downside is that they've got to pay a fine, so that there has been some speculation that might affect the dividend payment, which we won't know of until about November or December, because they report, I think, on a September basis. So it'll be November before we know about the effect. And it wasn't just the bond trade scandal that was part of the fine. The fine was kind of like a catch-all for various problems that ANZ had been in discussion with the regulator over, including charging people the wrong interest rates and not handling deceased customers quickly enough following this goes back to the Hayne Commission, where dead people were still being charged and not being taken off the books in a timely manner. So there was a number of issues that the regulator was looking at. Looks like the process is that they got to a stage where they agreed a statement of issues and then agreed a fine. So it started off in court, but didn't hit the courts in terms of a final arbitration. So it's been an agreed settlement. So I think, again, this points to Mathos wanting to get on the right foot with the regulator and fix up problems that have been dragging on for a long time. So I kind of see it as a good thing for ANZ if that's the case. And it's also a bit of an indictment of past management to continue to fight the regulator on issues that were clearly, now that they've been resolved, in the wrong for the bank. So it's good to see them step up and admit that.
Failing to refund fees charged to thousands of dead customers and not responding to loved ones trying to deal with deceased estates within the required time frame.
Yep. So again, I hope there's clawbacks. I think the clawbacks on past management has to be investigated pretty strongly.
You know what I think?
I can guess, but let's hear it.
5 years, Tony. 5 years, mandatory.
In H block?
But in H division.
H.
Yeah. With Vinegar Tits from Prisoner in the 80s. There's a women's prison.
In a female prison, right.
Yeah, if they're female executives, I mean.
Well, the outgoing retail boss was, yeah.
Well, there you go. Yeah, jail time. Straight up. That's just horrendous. Banks.
It's pretty bad, isn't it?
Banks. Horrible. It's just corporate psychopathy. The things that these businesses do and then try and justify it and get away with it, and then they get a slap on the wrist and everyone walks away and they've got their cushy
jobs and their cushy retirement funds and all that kind of stuff. It's just horrible. Terrible.
Yeah, look, I'd support stronger clawbacks from people like that. But it comes back to this whole idea again of just own up to the problem as soon as possible and clean it up. I mean, it's going to at least be a weigh on the share price. Now it's a weigh on profit because there are fines involved. It's a PR disaster. When you're spending money trying to promote your business, just save the money. Just own up to it, clean it up, move on. Fix it up, move on.
But if I go to their website, ANZ is committed to helping our customers reach their financial goals. Unless you're dead.
Well, the bank CEO might be a customer, Cam.
Tony, US Democrats press Trump for a trade deal that curbs China's production. This is my requisite, the Americans are whinging about China again story. I love this. US Democrats have asked the Trump administration to press China to curb structural overproduction, essentially overhauling Beijing's economic model, as Treasury Secretary Scott Bessent holds talks with Chinese officials in Spain. Structural overproduction, Tony. In other words, gee, they make a lot of stuff.
I don't even know what that means. Are they saying that China's flooding the market with cheap imports?
Yeah.
Or cheap exports? Yeah.
I had a long chat with GPT about it. It was trying to sell me on the fact that this was a bad thing. I'm like, so basically, China's making a lot of stuff and selling it cheaply, and the US is complaining about that. And they're like, it's like, but China's using state power to support its industries. I'm like, right. So other governments don't use state power to support their industries. Like the US hasn't invaded countries to support access to markets. At least China's not invading countries. They're just making stuff cheap and distributing it around the world. It's just ridiculous, the complaints that they have over, hey, you're making too much stuff. Stop making stuff. Why? Who said you could make stuff? Well, you did. You begged us to make stuff for 50 years. So now we got really good at making stuff. Now you're complaining about the fact that we're making stuff. This is what we do. We need to make money. We're making stuff and we're selling it. Where's your problem? Well, you're making too much stuff. Stop selling that stuff so cheap. Why? So we can sell stuff.
Okay, finished?
Not really. That's the whole point.
It actually is the traditional use of tariffs to prevent this from being a problem. So, Australia has used tariffs a lot to prevent Chinese imports of, I'll just pick one, steel, for example, to keep the Australian steel industry going. But it's also a long-term game. It's a bit like a monopoly, the laws around monopolies. Okay, if you only have one provider because they're so cheap, as soon as they get 100% market share, they put the price up, and then you can't reinvigorate your industry to compete because it's been decimated by low imports. So that's the classic economic argument for not allowing a country to be flooded by cheap imports. But it's usually controlled with tariffs, which I think the US is well placed to do at the moment. To go on and complain about the low imports, just go, nah. It's not important.
Yeah, it's different though when you're talking about a domestic situation where you've got businesses that have a monopoly and are dominating a particular sector. And when you're talking about a country that's trying to pull itself out of, a century of poverty, it's doing it for structural reasons. It's trying to get its country back on a secure economic footing by doing what it does best, which is making lots of stuff and selling it around the world. They're trying to get back on top where they were 200 years ago in terms of their economic and military capability versus other countries, so they can't get pushed around like they did in 1860, from 1860 to 1950. So it's a different kettle of fish. And World Trade Organization has anti-dumping rules and this and that, but it's very hard apparently for the WTO to do much about what China's doing because China's like, well, prove it, and they can't. So,
Yeah, but I'm not familiar with the Scott Percent article, but if you think your market's being flooded by a cheap commodity or a cheap product that's wiping out your local market, then that's what tariffs are for, really.
we offshored all of our manufacturing to China so we could get stuff made cheaply. Now they're making stuff cheaply and sending it back to us. Oh, no, that's not right. Hypocrites. All right, what else you got?
No, that's all I have. I've got a pulled pork to do on Noble Oak Insurance.
Well, I've got a couple of things, but that's good that you're doing NOL because I saw them pop up this week. Had to check their audit because it was the first time they'd been on my list. SSM, Service Stream, is a company that I hold in a couple of portfolios, Tony. They announced that the company has secured long-term base services contract with the Australian Department of Defence. The company has been appointed the provider of property and asset services for SA and the NT, which encompasses 113 defence sites and training facilities, including 8 bases. The business will perform and support estate upkeep, land management, aerodrome operations, and training area and range management services. The contract will operate for an initial 6-year term with 2 extension options of between 1 to 3 years to extend to a maximum term of 10 years at Defence's discretion. The combined value of the works for both regions is $1.6 million over the initial term. Shares jumped 16% on announcement. I'm trying to find oh, that's not my alert sheet. Where's my alert sheet? No, I don't have it. Okay. Well, anyway, I hold them in a couple of portfolios and they're doing quite well. They had a big spike. Here we go. SSM up. Oh my God. Look at that. Up 160% in 231. I have 2 parcels of them in my 231 portfolio, bought a day apart for some reason. In November 2023, they're both up 160%. And I also hold them in my super, which I bought earlier, actually, in September 2023, also up 160%. So good job,
Very good.
Service Stream. Keep up the good work.
Yep.
The other thing that popped up on my news alerts was Amico Holdings, EHL, mining company, experienced a significant surge in its share price.
Mining services company.
Sorry, mining. Yeah, well, it's mining equipment, isn't it? Mining equipment, they do, yeah. In the share price following confirmation of unsolicited takeover interest, highlighting the potential value markets see in the company. Shares closed up 8%. I did read an announcement that they made, which was basically, we haven't seen the whites of their eyes yet, but it's very nice of them to
knock on the door,
have an interest in us. I also hold them in a couple of portfolios, and they're up, 11% since August this year, and 28% since a week earlier in August, actually, this year. I bought them at 93 cents. Good job, Amico. Keep up the good work.
Yeah.
Getting acquired. We like this when we find undervalued companies and other people think they're undervalued as well and come and have a crack at it. Well, that's all I've got on my list of things to talk about, TK. Why don't you do your Noble Oak?
Yeah, and speaking of companies that could be acquired, I think this one might be a takeover target. But I guess I can make that comment about most companies on the buy list. It's Noble Oak Life. NOL is the code. They've just become a buy on the buy list, so they're a recent upturn. But I will let people know the ADT is only $19,000, so it's a small company with thinly traded shares. They're an Australian-based life insurance company. We don't see too many of those anymore because the banks kind of sold them off 6 or 7 years ago, or 7 or 8 years ago. They're predominantly a direct-to-consumer business, but they also partner with one or two other providers. Because they're a life insurance business, their products are the usual death, total and permanent disability, trauma insurances, and income protection. And they also have some business expense insurance products as well. They sell them directly on their website, but they also partner with brands under the guise of PPS Mutual, Avant Mutual, and a company called NEOS, which is also, it looks like it's an online insurance company. They also have a division called Genus, which is administering the runoff of a life insurance and funeral insurance, or at least the products that went with a company called Freedom Insurance, which ceased operations in 2019. So by runoff, I mean the policies were taken over and no new ones were written, but as they wind up or get paid out, then Noble Oak administers it. Company goes back a long way. So they were a co-op set up to insure local communities against death or disability back in 1877. So the sort of concept of insurance came about a long time ago, and basically everyone in the village put in a little bit of money, and when someone got sick or injured or died, their families were looked after from the fund. So gone back a long way on that with that concept. They demutualised in 2007 and then listed on the ASX in 2021. They listed at $1.95 a share, and the current share price is $1.49. So they've generally been going down since that listing. Interesting that that's happened because their latest results are very good, and perhaps that's why they've turned up again. Premiums were up 20%, net profit after tax is up 22%, and their market share was up from 3.3% to 4.1%. They're saying the growth was driven mainly by the digital platform and partnership with NEOS, the other digital online insurance company. And they're forecasting that their market share will get up to 10% over the next 10 years if they continue to do as well as they're doing. And they've guided in the next 12 months for 15% premium growth and 10% NPAT growth. So everything looks pretty rosy from their results position. Interesting market, the insurance market, and they hold 4% market share and growing. They're dominated by the Australian insurance market, life insurance market, is dominated by 3 or 4 companies. TAL Tower, who from time to time is on the buy list as well. AIA and MLC are probably the big 3. I'm suspecting, given that they're 4% market share and growing, so they're a small player, that one day that one of the big 3 or 4 might decide to take them over. But that's just a guess, and it may not happen now. It may happen sometime in the next 10 years, but it's typically what happens for these sort of aggressive startup type companies in a mature market. I guess the history of the insurance markets, life insurance market's an interesting one. So about 7 or 8 years ago, the banks sold off their life insurance divisions, and they kind of did it all at once. And they did it to international players who were specialists and to large standalone players like Tower, TAL, partly because of banking capital regulation changes, which strengthened the requirements on capital. And of course, life insurance companies long tail risks, so you get the premiums paid over your life, and they get held in a fund, and then they get paid out or not at the end of the policies. So there's a fair bit of capital tied up in doing that. So the banks didn't want that capital tied up in life insurance. They wanted it to go towards bolstering their requirements under the APRA regulations. So they started to divest. But also at the same time, there was a general reduction in the profitability of life insurance companies for a couple of reasons. One of them was the fact that the disability claims were being hit pretty hard by stress type claims that hadn't been factored in when the policies were set up. And so the profitability was being hurt on claims, but also too, it was a reasonably low interest rate environment, and a lot of the insurance pools are set up to buy highly rated bonds, and they weren't paying much, and so they weren't earning as much as they did on average over the long term. So was kind of like a perfect storm for the banks to sell off in life insurance companies. And then for a couple of years, even around COVID, the industry didn't do too well. But now we're out of COVID. Now the market's consolidated. Things seem to be turning around from a profit point of view for the industry. And certainly these results were good for Oak. The only other thing I found when I was researching the company is that their relationship provider, NEOS, had been put up for sale in June. I saw that was reported, but I hadn't seen who bought them and what their plans were. But I guess it's a potential risk, depending on whether NEOS was actually sold. I only saw articles about the company being up for sale. And secondly, who bought them and whether they continue to have a relationship with Oak, or with Noble Oak, going forward. So there is a question mark around that. Don't know what's happening there. In terms of the QAV numbers, the stock price is $1.53 when I did the download. And interestingly enough, that's 53% of consensus targets. So there's the market, or at least the brokers that follow this company, are seeing plenty of upside in the current share price. $1.53 was above our IV1 of 40 cents, but below IV2 of $2.21. Company isn't paying a dividend, so we can't score it for yield. Net equity per share is 96 cents, so you can't buy this at book or book plus 30, which is $1.25. Stock Doctor financial health and trend is strong and steady. Interestingly enough, Stockopedia don't rate it for quality. Their ranking is only 57, which is quite low. And the F score is 4 out of 9. But I'm not sure I necessarily agreed with the F score for this company. And when I sort of drilled down into it, the Piotrowski F score includes things like, well, in this case, it was recording a negative for things like, is it more profitable this year than last year? But that calculation was based on the ROA decreasing, return on assets. However, as I said before, their profit is up by 22%. So not sure, why it scored so badly on an F score point of view. But anyway, it did 4 out of 9. Stockopedia value rank, though, was 94. So they're seeing it as a value stock, and the overall rank was 81. So a little bit less than what we ranked it, but I have some question marks over the F score for this one. PE is 19.7 times, which is the highest in 3 years. So it gets a -1 on our QAV checklist. PropCap is only 2.4 times. So that's really good. Earnings per share growth forecast is 184%, which is quite large. And even though the PE is high, growth over PE is still some 9 times. So it's going to score on a growth metric for us. The CEO does hold a reasonable amount of shares, something like 6% of the shares on issue, and has been around a long time. I couldn't quite tell, but potentially from listing. But obviously wasn't a founder for a business that's been around 140 odd years. But also doesn't hold 10% of the company. So it misses out as being a score for us as an owner-founder. It is a new 3-point trend line upturn. So we score it for that. Does not have a consistently increasing equity, so it gets a 0 for that. So quality score overall of 10 out of 16 or 63%, and a QAV score of 0.26, so reasonably high on the buy list. Risks and positives. I think this has got takeover target painted all over it, being a sort of scrappy new online life insurance provider in a mature market. But it's the question of how long it takes for that to be the case. And the other questions I have is what happens to NEOS if it's sold? Does it get folded into a bigger company, and do they provide their own life insurance products rather than take Noble Oaks and rebadge them? And the other issue for life insurance companies always is what happens with interest rates. And if we're in a cutting cycle, then that may hurt profitability in the same way it did 7 or 8 years ago. So one to watch, only a small company, but it might suit people to have a look at that Noble Oak Insurance.
Thank you, TK. I'm looking at their most recent presentation, annual report presentation. Got an interesting slide on how they're using AI and intend on using AI, which is interesting. I haven't seen this cropping up like this in annual reports yet. I don't read that many, but
I have.
Yeah.
Seems to well, in presentations anyway.
Presentations.
Seems to be, happening in most presentations I've had a look at.
It's the du jour thing.
Yeah, absolutely.
They're saying it's in progress to use it for AI-generated call summaries, in progress for underwriting, streamlined using adaptive AI, in progress for automation, digitized claims and service flows, sales, predictive lead targets, and personalization, tailoring customer experience. Oh, also, yeah, automated rule-based underwriting is in progress. So they've got half a dozen AI projects in progress, they say.
And they all seem, to be quite feasible. I mean, AI will help all those things, I would have thought. It's just, next stage of automation, I would have thought.
Yeah, there's a couple of things that it looks like they've completed. It has a tick beside it. AI call monitoring and QA, predictive modeling for retention, and embedding Copilot for assistance, which is just installing Microsoft products, I think. But yeah, interesting to see how companies are trying to handle this. Of course, my big thing about companies like this and AI is how are you going to respond as an insurance company when the consumer can say to their AI, find me the best life insurance provider based on what you know about me. And it goes off and, does all of the research and reads through the fine print and flags all of the gotchas and looks at customer reviews and complaints and how many people have had to complain to the ombudsman about them, et cetera, et cetera, et cetera, and comes back and ranks them all for you and suggests
which is meant to be happening now with insurance companies. There are people who rate them, and you can log on to them and get that done for you manually. So they're probably more at risk than the insurance companies. But yeah, I take your point. And this company claims to be the best rated insurance company or the most awarded life insurance company in Australia. So they pick up lots of awards. But I went to their website and I can see stars and cups and awards for this and that. And I go to the NEOS website and I can see stars and cups and awards for their life insurance products. So last week when I did Finbar, they had stars and cups for their awards. So it's I'm not saying it's a bad thing, but there seems to be a proliferation of awards, industry awards for various industries.
Yeah. First thing you do is create your own award, right? Well, I just throw it into GPT. Tell me how Noble Oak is rated by customers. It's got what customers like: high overall satisfaction, good value and competitive pricing, strong claim acceptance and decent payout time, solid additional features and benefits, things like grief counselling, financial advice reimbursement, premium freeze pause, indexation, transparency in some aspects. Customers say that processes like paying out funeral benefits are explained clearly. Common complaints, weak points, premium increases over time. Many customers are unhappy that costs rise as they age. Lack of clarity on some underwriting exclusions, customer service variation, not all features are available for all cover types, discontent around renewals and increases. Verdict: overall, Noble Oak is well rated, especially for people shopping for life insurance with competitive premiums and wanting good features. Blah 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 blah. So anyway, it's I'm using AI to help me evaluate products and services more and more all the time. I think a few years from now, that'll be fairly commonplaced.
Yeah, look, it's back to the Google reviews, isn't it? I mean, how many of those are being written by the company and how many of those are being written by the customer?
Yeah, good point. I'm not sure how AI is going to be able to work that out. But, yeah. I think the big challenge for a lot of businesses is going to be, what happens to your business model when customers have access to unlimited information, and not just information, because we get that via Google, but knowledge.
Yeah.
Expert knowledge about your strong points and your weak points and how you really compare, not what your marketing says, what's really going on,
Yeah, for sure.
Okay, after hours, Tony, what do you got for me?
I don't have anything really. Our horse Lake Forest ran on Sunday and ran a credible third, so that was nice.
Congratulations.
And like I said, we spent the weekend in Melbourne catching up with people and going to parties, and it was good fun.
It's nice. And how's all your skin cancer scarring going? Is it healing well?
Can't tell. The stitches came out on Friday, and it's been under plaster since then, so I've got to wait another week before I have a look.
Looked okay though.
But
when
yeah,
the stitches
no
came out?
pain, no, you know. Yeah, well, taking the stitches out was a bit painful, but it was short-term pain. The nurse was going, "Oh, I think that you've started to grow over the stitches. We should have got these out a bit earlier."
Oh.
But
Well,
all out, all good, should be fine.
as you know, I'm not going to Kung Fu this afternoon because I'm going to my 2-year appointment with my cardiologist.
Hmm.
And as I said, I'm just going to walk in, lift up my T-shirt, say, check out these abs. And he'll be like, get out of here. You're wasting my time. You're doing great. Look, you got the body of a Greek god. What are you doing here?
How old was Alexander the Great when he died?
32,
He
something like that.
had good abs.
He got poisoned.
Right.
Or malaria, really. 2 versions of it. One is he was poisoned by his own men. The other is that it was malaria. We don't know. I
Well,
watched.
good luck.
Yeah,
Good luck
thanks.
with your appointment. Yeah, I'm sure you'll be fine.
Yeah.
But don't show him your abs.
Yeah, I'm
He
showing
doesn't
everybody.
need that.
Everyone needs to see my abs. He's quite a rotund gentleman too, my cardiologist. So I'm gonna.
It's a worry if he's a cardiologist,
I
isn't
know,
it?
isn't it? Right? Yeah.
Yeah, have some chips and a milkshake.
Yeah, he'll. I'm going to start charging him for tips on how to get in shape.
Yeah.
I watched a bit more of Breathless
Yeah.
over the weekend, and I read up on the American actress in it, Jean Seberg.
Mm-hmm.
Do you know her story?
I don't know a story. I know of her. I don't know a story.
Tragic story. Horrible story. So she was discovered in the late 50s by Otto Preminger, and he made her the star of Joan of Arc, which was a huge flop. And she had very little to no acting experience before that, and she was criticized for being terrible in it. But he believed in her, so he put her in another film that also was a huge flop, and she was criticized for being terrible. But she happened to meet a Frenchman at some point who was a director, and she moved to France. And he put her in a couple of films that did a little bit better. Then she got cast in Breathless, which was a huge hit, and everyone raved about her performance in it and how great she was. And she was like this huge star of the French New Wave. But then she went back to Hollywood, made a couple of forgettable things like Paint Your Wagon and films like that, went back to France. But was involved
Paint Your Wagon wasn't forgettable, but anyway, yeah.
It wasn't great, but it was sort of, I was born under a wandering. Anyway, she got married, divorced a few times, but when she was in the US, she was a vocal supporter of the Black Panther Party. And so the FBI went after her as part of the COINTEL program. One of the agents proposed to J. Edgar and was approved that they should just destroy her reputation. So she was pregnant at the time, and they spread a rumor out to friendly journalists that she had actually been knocked up by one of the Black Panthers. She became like a nervous wreck, and the baby was born prematurely and died. And she put it in an open casket so everyone could see it was white. Then she developed this drug problem, alcohol problem, and ended up being found dead, wrapped in a blanket in the back of a car in France when she was about 40. Dead from, I think it was an overdose on sleeping tablets, barbiturates or something. But the coroners determined that she had so much alcohol in her system at the time, she wouldn't have been able to get herself in the backseat of the car or into the car.
Oh.
So somebody else was involved. She had just left, I think, her 3rd or 4th husband at the time. And anyway, no one was charged. An unknown person was charged, according to Wikipedia, but we don't know any details. So, sort of a tragic life she had, but she was great, I thought, in Breathless. Really, really charming and sweet, and yeah, dealing with all of Belmondo's nonsense. So there you go. But yeah, I haven't finished it still. I'm watching it in bits and pieces while I'm stretching.
Yeah, I am too. Yeah.
When Chrissy's upstairs getting ready for bed, I tend to do my stretching routine, and because I'm trying to figure out how to do the splits this year, and Chrissy can do the splits.
Never been high on my list of objectives in life.
Yeah, well, you don't have to do head high kicks every night, do you? Yeah, so.
Or do you have to do the splits like with one foot on a pile of cinder blocks? And,
yeah.
Okay.
Jean-Claude Van Damme style.
Yes.
Yeah.
That's an interesting sport you do.
It's the greatest, man. What else have I got for you?
We watched a couple of movies, but they're not really worth reporting. But
Yeah.
Thunderbolts was awful. There's Mission Impossible sequel that came out recently. It was good fun, great spectacular movie, but really hard to follow.
Right.
From a plot point of view. But amazing stunts and everything. But yeah.
I've been watching the new season of Peacemaker.
Either.
Have you watched any Peacemaker?
No.
Peacemaker's fun.
Is it?
Oh,
okay.
yeah.
That's really the Sarah. What's his name? John Cena?
John Cena, yeah.
Yeah, okay.
Yeah, it's a very funny superhero sort of thing. Really well done. He's terrific.
Right.
Like, John Cena's an incredible surprise as a talent. Very, very funny guy, and does a great job in the role. But yeah, watching that. But after the events in the US last week, I've spent a lot of time talking to Taylor about when to get out.
Mm-hmm.
And he's like, I don't know, what do you think? And I said, as soon as there's any escalation in terms of troops on the streets or additional deployment of, more ICE or National Guard get called into California, or suspension of habeas corpus or declaration of martial law, grab your bag, you get on the first plane out of there and get the hell out of Dodge, man. And he's like, yeah, okay. But it's not it's not looking good over there, is it? No.
The whole Charles Kirk thing is probably going to light if it hasn't already, light another powder keg in the US.
And the crazy thing is, where the suspect was arrested, St. George, Utah, is 20 minutes away from where Chrissy grew up in Cedar City. It's the town next door to Cedar City.
Right.
Chrissy's got family that lives there. It's a small place, been there a bunch. It's a, little country town in the middle of Utah. So, yeah, that was weird, the whole Mormon-Utah connection to it. And then, I don't know if you saw the news in Salt Lake City, 2 guys were arrested for planting a bomb under some, I don't know, police vehicle or something like that. No, media vehicle in Salt Lake City that's there as part of the coverage. Some people placed a bomb that didn't go off but got found and they got arrested. So, yeah, it's not a good time to be in the US.
It is not, no. Speaking of Taylor, I did see in the Fin Review recently that somebody sold an influencer management business recently for a lot of money.
Really? Oh. I saw an article where somebody's built in the US is building a business around AI influencers, and also somebody's just launched one over AI podcasts. They're generating like 5,000 AI podcasts just with AI hosts talking about any niche topic you want. They'll create an AI podcast about it. So that'll be interesting. We're about to see an even bigger flood of influencer content and AI content. And interesting.
And AI created music. AI created movies.
Yeah.
Yeah.
Okay. Well, that's all I've got, TK. Oh, no. I've got a book that I can recommend. I'm enjoying it. I'm halfway through it. If you're looking for a sci-fi read, which is quite well done, When We Were Real by Daryl Gregory. It's a 2025 book, came out not that long ago. The premise is that 7 years prior to the events in the book, the world found out that we're living in a simulation. Because the creators of the simulation went out of their way to point out that it's a simulation. And it's kind of about how the human race is coping with the fact of finding out that we're in a simulation, which I haven't seen before as a science fiction idea, as a novel. So I'm finding that interesting. And the bottom line is, there was like chaos for a couple of years, and then everyone just went, "Oh well." It's like finding out you don't have any free will.
No free will, yeah.
Right.
Exactly.
It's like, okay, well, you just get on with things, right? But
exactly.
The creators, the simulators, have created a bunch of phenomena that are known as the impossibles, like tornadoes that are frozen in place, or portals from one side of the planet to the other, things that break the laws of physics, just to demonstrate that it's a simulation. And the plot of the book is there's a group of people in the US on a tour bus that's taking them to a tour of the impossibles in North America. But meanwhile, there's also a terrorist group that believes that they are the only real people and everyone else is an NPC, and they're going around just trying to kill people that they believe aren't real anyway. So it doesn't matter. And there's, religious people and hippies and everyone trying to, get their heads around what it all means. And yeah, it's an interesting premise, quite well written.
Good. I saw a premise on my feeds on the weekend saying something about the universe is so improbable that when we figure it out, it's going to just change into something even more improbable and incongruous.
Well, I think that's already happened in the US with Trump getting elected, hasn't it? That was highly improbable.
I didn't find the Charles Pike thing.
Kirk.
What's his name?
Charlie Kirk.
Kirk, sorry. I'm getting mixed up with the person who played Captain Kirk.
Yeah.
The Charlie Kirk thing. I mean, if your business model is to provoke gun crazy Americans with extreme views, it's probably going to end the way it ended, really.
It's karma, really, isn't it?
Yeah.
Yes. But
regardless of what you thought,
you don't want to say anything about it. There are thousands of people that have lost their jobs because they said something even quite benign about it online over there, and they're being taken down. Even I saw somebody in Canada lost a job. She was fired by her employers. Somebody who worked in just a student I saw on Reddit, 21-year-old working in a restaurant, made some comment online about it and got called in and fired by their bosses.
Which is kind of crazy for a couple of reasons, but not the least of which was Kirk was always a fierce advocate of free speech.
Yeah. Yeah, well, let's not let logic and reason get in the way of retribution, Tony.
It's 1939 again, isn't it?
It is.
1938.
Yeah. Anywho.
All right.
Have a good
On
week.
That happy note.
Yeah.
Shit. Yes, have a good week. Good luck with your appointment.
Yeah, thanks. See ya.
See ya.